The world as we know it is changing. Cars are now driving themselves. Spaceships are now going to space and park like taxis. And Bitcoin and other cryptocurrencies are replacing money as we know it. Until now, everything else seemed to evolve except the world of banking. In Africa, however, mobile money is well on its way towards replacing the banking system as we know it. In this video, we will help you understand why mobile money is the banking system's largest threat as of 2021. This research was based on Uganda, Kenya, Ghana, and several African countries where mobile money has a strong base. This video was sponsored by DusuPay. The company provides payment APIs for global businesses processing payments in Africa. Check out www.dusupay.com. So to help you understand why mobile money is a threat to the banking industry in Africa, we'll break down the business of banking one by one. We'll focus on what previously gave the banks an advantage and how this advantage is being eroded by mobile money. You'll get to understand that right from the beginning, the strategies devised by the mobile money companies were intended to defeat the banks as we know it. These strategies rotated around hitting the banks where it mattered the most. So let's get started. Number 1. Day-to-day utilities transactions. Before 2007, a large portion of the bank's business was brought about by utilities transactions. Whether someone was paying for taxes, airtime, data, or any other utilities really, the bank was the only trusted option that someone could use. Fast forward to 2021, the bank is only playing catch up to the mobile money providers. 1 out of every 10 transactions is done by the bank, and the other 9 are in most cases done by mobile money. This came about on grounds of mobile money providers putting utilities integration as part of their core strategy. They made it easy for other companies to come and work with them, and regardless of the service you are selling, whether it's airtime, whether it's water, whether it's power, they made every integration as easy as possible. This wasn't the case with banks, where you had to jump over hoops just to get one integration done. By having several more integrations, people naturally opted to use the mobile money providers as opposed to the banks. Number 2, the ATM and branch networks. The ATM and branch networks are what gave the banks competitive advantage at the beginning. I mean, the banks had a lot more reach than any mobile money provider back in 2007. The ATM and branch network, however, is just a cash deposit and withdrawal point. When mobile money had just started, one of the largest questions they had to address was how do they beat the bank's network. They noticed early enough that the rural areas didn't have any banks or ATM networks. In some cases, people in villages had to travel up to 30 kilometers just to access one ATM network to withdraw money. Part of what was making it hard for the banks to scale was the fact that each ATM they invested in cost lots of money just to set up. As opposed to going that direction, they opted to convert the phone into a cash out and cash in point. What this meant was anyone with a $10 phone, with or without internet, would be in position to deposit money and withdraw the money off any type of phone. Fast forward a few years later, the agent network is in every 100 meters, any direction you walk. Every fuel station, every supermarket, even the street vendors are now mobile money agents. With agents in every 100 meters, the convenience created was unmatched. This made mobile money the preferred network for every local person, given how much they had to struggle just to find an ATM or bank branch to withdraw money from. At point number 3, we have peer-to-peer transfers. When it came to person-to-person transactions, the bank had two core problems. Number one was the cost of transfers, and number two, the time taken to transfer the funds within or across the borders. To help fight problem number one, the telecoms made it extremely cheap to transact with mobile money. In Uganda, for example, it costs $0.3 to transact any amount on mobile money, whereas it costs at least $5 for a same-day transfer within the banks in Uganda. To combat problem number two, time taken to transfer funds, mobile money made their transfers instant. I mean, if you can move money from Kampala to Chisoro and the funds would arrive in a couple of microseconds, why would you again use the bank? Naturally, people pivoted to the cheaper, faster alternative, hence mobile money thriving. At point number 4, we have international transfers. This was one of the few areas where the bank had extra advantage because of the SWIFT network. As a way of fighting back, first the telecoms integrated with each other across the African continent. Someone could now easily send money from Uganda to Kenya and it would be instant. And another person could send money from Rwanda to Tanzania and the cost of transfer would be barely $4. In addition to this, the telecoms went ahead and partnered with companies like World Remit, Western Union to make it possible for people with funds in EU and the US to directly send money to mobile money. The best bit about this is whether the transaction is coming from UK, US, Kenya, South Africa, or Rwanda, as long as it's going to mobile money, it reflects on the person's mobile money instantly. This convenience and ease made mobile money the preferred network for most of the people in Generation X. Naturally, this has pivoted more people towards using mobile money than the banks. And number 5, other financial investments. Insurance and some of the other financial assets were one of the most regulated industries. After several years, however, we noticed that mobile money has created entire menus dedicated for this. You can now pay for your insurance, you can now buy stocks, you can now pay for your forex directly using mobile money. The conclusion: mobile money has been eating away at every aspect of the bank's business. Whatever the bank could do in Africa, mobile money can do better. If the banks don't find a way of fighting back, we might possibly see another era of banking built around mobile money and cryptocurrencies. In your opinion, is mobile money a threat to the banking world? If you aren't subscribed, please don't forget to hit the subscribe button. That's all for today, folks. Thank you.